Look, this is a really good time to be in the gold business. Price of gold is up about 50% over the last year, the last 12 months. And the gold equities are up about an equivalent 50%. So we're absolutely in the right place being in gold and being in gold equities. And what's really interesting is that in the last, the last few months, so just in 2025, you're starting to see those old trends emerge where the price of gold is up, say, 25%-ish, and the equities are up almost double that. So equities outperforming the metal. And that's what we've seen in past cycles. The next part of that is to see the juniors outperforming the senior gold companies. Now look, I am excited about this business because of where gold is and the dearth of opportunities for replacing future production. I am not seeing a response from the big gold producers. They're not investing in the sector. In fact, one of the biggest is actually declared defeat and has eliminated itself from this race to replace reserves. It's trading technical risk in the United States for geopolitical risk in Pakistan. Of course, I'm talking about Barrick. And I think that's a really good sign for those of us in the development space or those of us who invest in the development space, because it's a sign that there's going to continue to be a dearth of really good opportunities in good geography to produce gold. Revival Gold is a growth company in gold. We have 2 projects in the Western United States, 6 million ounces in resource moving forward to production. We have a target of about 160,000 ounces a year from the 2 projects, from open pit heap leach. And very importantly about Revival Gold, we're really about a phased approach to development. As Don said, we have 3 aspects to our pipeline. I'm just talking right now about the first 2 phases of that pipeline of growth. Veteran gold team that's done it before, and in a market cap which I think is extremely compelling right now. So currently trading at about $70 million US market cap relative to about $520 million of NAV. Another way to look at this is that we're trading right now at about $11 per ounce of gold in resource. A third way to look at this is in terms of gold exposure. So for every 1,000 shares of Revival Gold, you get exposure to 30 ounces of gold in resource. We've got about 50% insider, 50% institutional and corporate ownership, which is a strong vote of confidence for individual investors who don't have the time and energy to do the sort of digging that Don and others do to understand underlying value and risk. And I would point out about 15% insider and board advisor ownership. I'm going to skip over the team here, except to say that I'm a mining engineer and I'm surrounded by a number of other people who've done it before in the gold business, both in terms of discovery, but also in terms of production and operation and in the market, making money for investors. We're in the Western United States. Why the Western United States? Because this is a great place to be mining for gold. We're in a very permissive jurisdictions with Idaho and Utah. In fact, Utah was #1 on the Fraser Institute list for places to be investing in exploration and mining, ahead of all other jurisdictions in the world. A fantastic place to be. Our Merkur project, a year ago, I was on this podium and I was talking about this new acquisition we'd made. And I said to the crowd at that time, maybe some of you were in the audience, that we were really excited about this project and we were on our way to a PEA, a preliminary economic assessment, and the possibility of permitting within 3 years. Well, let me report back to you on that. This project, located about an hour outside of the city of Salt Lake, is a Carlin-type system. These are very large geological systems for gold discovery. In fact, this is the first Carlin-type system ever identified and mined. We are on private ground in the U.S., in the United States. That's very important from a permitting point of view. And of course, we're on this very permissive successful past producer. So we have proven ability to produce gold successfully from this site. And here are the PEA results that I said a year ago we would be delivering to this audience this year. Some $300 million of NPV from about 1.4 million ounces of resource in an open pit heap leach operation with 2 years to complete permitting. This is an excellent place to be, and we're really excited about these results. Here's a cross-section through the main part of the deposit. A couple of things to point out about the situation we're in here with the Mercer Gold Project in Utah. First of all, those open pits you're looking at in the cross-section are relatively shallow, about 150 meters deep. Secondly, there's lots of expansion potential to them. And we certainly want to get in there and do more drilling around this particular section here in the Rover resource area. And I'll tell you more about those plans in a few moments. One of the things that really attracted us to this site, and it's in the name, Revival Gold, is that it's all about reviving a proven past producing site. So here we are on this site with hydropower to site, with a paved road to site, with office infrastructure on site, 30 minutes from a town of 40,000 people, so no requirement for a camp or fly-in, fly-out operations. Some of those things that Don was talking about that are really important, the details for success. And we're rebuilding this project on a site that's got proven and deep technical data, which lowers risk for restart. This is too short a form to go into a lot of details here, but I do want to point out that this project benchmarks well against any of our peers. On the left side of this page is capital intensity per ounce of gold production. Why is that important? Because the less money one spends on getting into production, the more benefit to shareholders. And here you can see our two projects, the Mercer Gold Project and the Bear Track Arnett Gold Project in Idaho, both have low capital intensity, about 30% lower than many of our peers. On the right-hand side of the graph, again, I'm hearkening back to some of the points that Don made, low AISC on a relative basis compared to any of our producing peers in the Western United States, in the United States generally. And that's a function of our grade, it's a function of strip ratio, it's a function of that great site that we're in. And all of these things distill down to value for investors because, of course, the difference between the price of gold and the all-in sustaining cost is what you take home as an investor, as an equity holder, after paying back capital. Here's the cash flow, and one of the reasons why we should really be excited about taking exposure to gold equities when the gold price is moving. It's because there's a lot of leverage to upside into the metal. And I want to emphasize that we are a 100% pure gold company. So this is not a gold equivalent situation with silver or with copper as a byproduct. You are getting 100% gold. And when you have 100% gold and you have this kind of exposure, there's lots of leverage to the upside. And as I've tried to point out, relatively little on the downside risk because, again, we're working from proven gold discovery sites. Think about Malartic. Think about Detour. Think about Kirkland Lake Gold. All proven past producers brought back to life, revived in a sense. Permitting is a really important aspect of this game. The purple bar on the graph on the right-hand side of this page describes the 2-year permitting timeline that we're looking at. We will fill in the details around that, and some of the more astute investors in this crowd will want to see those details. That's the next phase of work for Revival Gold. We'll work on drilling, metallurgical test work, and advancing the baseline study work and the permitting preparations around that, all of that to come this year. Quickly on the exploration, I want to point out that this is a very permissive area for discovery. We are right next door to the great big Bingham Canyon. Of course, the biggest copper gold producer in the United States. And it's no surprise to most of the folks in this audience that, these are the kinds of places that you find more gold, and you find it for many, many, many years to come. Our property position pictured here is over 15,000 acres. It's an assembly of land that took 12 years to put together. And it has a great history. It was one of the founding assets for Barrick back when they were in the gold business. Here's a cross-section through the Mercer deposit. Again, a lot of details we could talk about here, but the important point is that this is a sedimentary structural environment with scale. And that means the potential for a lot of discovery. And I would emphasize that here we've got targets, the figure on the right side, the top right of this slide, describes that sedimentary structure, and the fact that we've got drill holes on the east side and no drill holes for a kilometer on the west side. Why is that important? That's because we've got permissive geology, and we've got the opportunity for more discovery and expansion of our resources. What's the path forward for Revival Gold? Well, we're focused on advancing towards free cash flow. I'm a mining engineer by training and by background, 35 years in this business, and what I really love doing is building growth in gold for the benefit of our owners, first and foremost, but also for our team and for the communities in which we live and work. And we do that by moving to free cash flow, first with our Mercer Gold project, open pit heap leach, 100,000 ounces a year. Secondly, with the phase of growth on our Bear Track Arnett project, taking us up to 160,000 ounces a year. And then thirdly, going underground. And I think that's where the real joy comes. This is a really exciting gold system we have at Bear Track Arnett. We've just scratched the surface here, 5.5 kilometers of mineralized trend, another 5 kilometers to pursue. I've talked about leverage and upside. This slide summarizes it in a nutshell. Everything really comes down to net asset value, NAV. Currently, we have about $500 million of NAV in Revival Gold. We started with nothing, and the upside on this is tremendous. $1.2 billion of NAV at a $3,000 gold price. I want to take a moment just to brag about our team. Don mentioned that we've got a really good team. Our VP Engineering Development, John Meyer, our Chief Geologist, Dan Pace, our CFO, Lisa Ross. These are wonderful people doing fantastic work. We have accounted for 2 of the largest new gold discoveries in the United States in the last 15 years. That's testament to the capability of the team, the efficiency with which we operate, and our results. Thanks so much for having me, and Don, I really appreciate the invitation to join this group.